forward today. We're already in week 5. You guys have done a great job so far. Very proud of you. Good work by all of you. Let's just dive right into the work. Dive right into the work. So, hold on 1 second. Stop. Okay. So this week's assignment and the key word this week will be Acme. Acme. So let's take a look at it together. And then I'll give you guidance. And remember last week we looked at the Federal Reserve. So if you remember last week's work, we spent time looking at the Federal Reserve and how the Federal Reserve works. Make sure I'm sharing the sound.
Overview/scenario. As the Chief Financial Officer, CFO of ACME, a multinational corporation, you must present a strategic financial analysis to the Board of Directors. The board seeks an executive summary presentation highlighting macroeconomic factors and banking institutions that impact ACME's global performance. Recent financial instability has raised concerns about the influence of the Federal Reserve, central banks in other countries, and private and commercial banks on interest rates, foreign exchange, and credit access. Currency fluctuations, supply chain volatility, and global monetary policy shifts have impacted profitability and strategic planning. As CFO, you will analyze the influence of these institutions and offer strategies to maintain financial stability, manage risks, and support expansion. Assignment instructions. Create an 8-slide PowerPoint presentation with audio narration and speaker notes. Each slide should include visuals and data that clearly support your key points. Your presentation must address: Slide 1, Introduction. Brief overview of ACME's financial challenges in the global economy. Identify the relevance of monetary and banking institutions to ACME's situation. Slide 2, Role of the Federal Reserve. Explain how the Federal Reserve influences interest rates, the money supply, and exchange rates. Provide at least one real-world example showing how the Fed's actions have impacted a multinational company. Slide 3, Central banks in other countries. Describe the function of central banks outside the U.S. in regulating monetary policy. Compare their influence with the Federal Reserve and explain how their policies impact global operations. Slide 4, Commercial and private banks. Differentiate between commercial and private banks in terms of services offered to corporations like ACME. Explain how these banks support or limit international financial strategies. Slide 5, Balance of Payments Analysis. Break down the components of the balance of payments: current account, capital account, financial account. Analyze how these components indicate risk or opportunity in potential markets. Slide 6. Exchange rate risk management. Identify specific strategies, e.g., hedging, forward contracts, revenue diversification, ACME can use to manage currency volatility. Explain the benefits of each strategy in the current economic environment. Slide 7. Market evaluation and recommendations. Recommend favorable markets for expansion based on central bank stability, trade balance, and banking sector reliability. Use real-world data to support your recommendations. Slide 8. Strategic Financial Summary. Connect your recommendations to ACME's financial goals, stability, risk management, and profitability. Define at least 2 key performance indicators, KPIs, to monitor the success of your financial strategy. Submission requirements. Format PowerPoint.pptx with 8 content slides, not including title or references slide. Speaker notes. Include brief bullet points summarizing your talking points. Audio. Record a brief narration for each slide explaining your analysis, 2 to 3 minutes per slide max. Visuals. Include charts, graphs, or images to support your analysis. References. Cite all sources using APA format on the final slide. Please check the course calendar for specific due dates. The file's name should be your first initial and last name, followed by an underscore, the name of the assignment, an underscore, and the date. An example is shown below. Student underscore example problem underscore 101504.
Okay, so that's how you're going to do it. That's how you're going to do it. And now, let me give you my guidance. So if you go into announcements and the keyword is ACME, keyword is ACME, go into the announcements, go to week 5, full guidance. And there you go. There's your introduction. We're a little tight for time today, so I'm going to make this quick. And there's your recommended visual. Use a visual like that. So I'm basically giving it. You can feed this into AI if you want. But when you get it, then go to PowerPoint and use the designer function. Don't just feed it into AI and give me a plain AI. I've seen that a couple of times. I'm not loving that. Bottom line, when you open this up, and I'm just going to open up another class. When you go into PowerPoint, then you go into designer. Now, it's not going to do anything for this because it's already well, it is, look. And you can pick a designer function. So you got to pretty it up a little bit. So it looks like you did some work. And I'm trying to teach you how to do this stuff for the real world when you have to do it for work. Okay? So after you plug my work into AI and read through it to make sure it's correct, you can plug it into the designer function and that'll make it pretty for you. Then you do the role of the Federal Reserve, which again, watch those videos that I gave you last week. Then central banks in other countries. Then commercial and private banks. Commercial banks are banks that do business with other big firms. Private banks do it kind of privately for very wealthy individuals. They give a balance of payment analysis. Remember, what is a balance of payment? How much money are we exporting? How much money are we importing? And we do that for every country. Now, we're an import-based economy. We buy a lot more than we export because we're a consumption-based economy. Plus, on a geopolitical basis, we give business to other countries to keep them as our allies. We have bases all over the world. Many of you have been in the military know that we have military bases in many countries. Well, of course, it helps to give those countries business. And we buy plenty of foreign goods, cars and handbags and trips and all kinds of stuff. And then talk about exchange rate management. How do we hedge off exchange rates? Forwards allow us to hedge off an exchange rate. So for instance, if I have $1 million coming in on a euro, I can go out and sell those euros going forward and lock in my price today. That's what a forward allows me to do. So I don't have to worry about the euro going up or down. A future, I do it on an exchange. That's the main difference. Sometimes we can naturally hedge. So for instance, when BMW produces cars and sells it here in the US, if they make all the product over there and then just sells the cars, all right, then they're at a risk because that whole cost, the whole money they make on the car has an exchange rate risk. But if they actually move some of their production on in the United States, they can pay some of their costs in dollars, and that hedges off that piece. That's what natural hedging is. And they make recommendations. And you could just put speaker notes in. I'll accept that, and there's your file. So that's all you have to do. Follow my guidance, watch my videos, and that'll cover you for this week's work. So that's all you need to do. Just follow my guidance and put it in, and you'll do fine. And if you have any questions, of course, just contact me. Since we're only 3 people in the class, I will get right back to you. Okay? Thank you. Remember, Acme is your keyword this week. Acme is your keyword.